I think a number of factors need to be considered when countries are thinking about changing their tax systems. First of all, we need to think about the quality of the procedures that they are using. Are they modern? Are they in line with the guidelines of the IMF and their TADAT protocols? Are the procedures up to the standard of the EU Fiscal Blueprints? I think procedures and getting them right are an essential prerequisite for modernization. Secondly, then, is the quality of the information technology systems on which those procedures are applied. Good IT means efficiency, it facilitates risk analysis, it facilitates customer service. So quality of IT is another essential condition for modernization. And I suppose if I were to name a third one, it would be good governance within the tax administration. That means organizing and prioritizing through a well-run management committee and possibly subcommittees for some topics like IT or compliance management. I've been asked to talk a little bit about how the Irish Revenue Service made the transition to a modern revenue service. I think the key event in that transition was one of the first changes we made, which was the move from inspector-driven assessment to self-assessment. Self-assessment reduced the number of disputes, and we had large numbers of disputes with taxpayers about their tax liability. Self-assessment gave a sense of fairness and reduced the compliance burden on taxpayers. If there was one thing that marked a serious and notable progression towards a modern regime, it was the introduction of self-assessment in the late 1980s, early 1990s. I've been asked too about the risks and uncertainties associated with change and how to deal with resistance or objections to change from within the organization. I think the way to deal with the risks and uncertainties is really to plan properly and to use your governance mechanisms, to use project management, to have clear prioritization and good planning and execution. And I think that way change can be handled safely and methodically. The question of resistance to change within, I think, can be dealt with by sound change management techniques. That includes honest explanations to your staff about what is going to happen as change occurs. Staff generally have concerns about how change is going to affect them. You need clear and reasonable answers to those questions. And if you can do that and explain what the change means, if you can tell people where they're going to be affected by this and how, and if you can give them certain key guarantees like that will continue to have a role within the organization, that if their role changes, they will get training, then I think resistance, if that's the word for it, can be overcome. But really what people have described as resistance to change is only reasonable people who are concerned about their future asking reasonable questions. And if you can give sensible answers to those questions, I think you can make change happen. We've been here in the CEF in the last couple of days looking at behavioral science and behavioral economics as it affects tax administration. I've been asked if it affected our own reform program, and the answer is, I think, not in the early days. Breakthroughs in behavioral science have been relatively recent, But of course, tax administrations all over the world are looking at the implications of it. One example maybe of the application of behavioral science that is common enough in Europe today is the use of the prompted voluntary disclosure mechanism recommended in the EU's Fiscal Blueprints. That's where the tax administration uses its risk analysis and intelligence to identify taxpayers who display certain risk features and prompt them to review their tax liabilities and, if necessary, to make a corrective declaration. I think that is very much in line with what came to be known as behavioral science. I think from the excellent discussion we've had here at the CEF in the last couple of days about the application of behavioral economics to taxation, I think we're going to all be using behavioral insights to a much higher level in the future. And it can only help to reduce the cost of tax administration and help and prompt taxpayers to do the right thing voluntarily.